The euro is enjoying a summer of love. Back in June, the clear risk was that the UK's vote to leave the EU would end up hitting the Eurozone economy harder even than the UK's, and the euro more than sterling. That hasn't quite worked out. While focus has been elsewhere, on the pound's plunge, the dollar's mood swings and the yen's stubborn ascent, the common currency has cranked out a very respectable rally. €1 now buys around 86 pence, not far off the levels it hit when the UK really landed in hot water in 2008. That's enough to leave British holidaymakers choking on their sangria in the sun. The currency's rallied by some 18% against the pound so far this year, and the Brexit-inspired drop against the dollar in June has now evaporated almost entirely. Now we have fresh preliminary data on the state of Eurozone businesses in August, and it looks surprisingly rosy. The latest Purchasing Managers Index is only slightly higher, but a win's a win, and economists were expecting a slump. It seems Eurozone businesses are really taking the Brexit vote in their stride, and that growth rates could blow away expectations. This slug of data has already led JP Morgan to rethink what it sees as the next steps for the European Central Bank. It has scrapped its call for another rate cut and thinks the central bank will put off any expansion or extension of its bond buying programme. Now, of course, that may end up being an isolated view, and moreover, it's Jackson Hole week. There's every chance that the Fed could pull the rug from under the euro's rally by firing up the buck with fresh talk of rate rises before the year is out. But for now, the euro is basking in the sunshine.